Is WPP a buy or a sell? Let's get started with the model. This is a large cap company, 11 billion market cap. They're trading at $52 a share and they have 215 million shares outstanding. WPP is one of the world's biggest advertising agencies. Founded in 1985, based in London, UK. Let's look at their financials. The way you value a company is you estimate the free cash flows into the future and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. Their free cash flow was cut in half from 2.2 billion down to 1.2 billion. Margins are down a lot as well, from 14% to 6%. Net income is the profit or loss on the income statement. It's revenue minus expenses. That's also down a lot, from 800 million to 256 million. And margins only 1%. That means they converted only 1% of their revenue into net income. Revenue is a sales for the company, and that grew from 16 billion up to over 18 billion in 2022, but it's still around 18 billion currently. They pay a big dividend, 4.8%, and they can cover that dividend more than 2 times with their free cash flow. We estimated 4 years of future free cash flows. We also estimated a terminal value of sold cash flows past year 4, that's 21 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $18 billion. We divide that by 215 million shares. And we get a calculated stock price of $85. They're trading at $52, so they're trading at a 39% discount. It's a buy according to the model. Do you think it's a buy or a sell? Let me know in the comments. There are 18 companies in the same industry as WPP, and if they have a number in red, they're worse than the median. If they have a number in blue, they're better. They spend the most in CapEx, 217 million. CapEx is the investments in property, plant, and equipment. They do have a high debt-to-equity ratio. For every dollar of equity, $1.40 of debt. They pay the second biggest dividend. They're one of only 5 companies that pays a dividend, and they generate a lot of free cash flow, 1.2 billion, second to Omnicom. They rank second in market cap, slightly ahead of Interpublic, and they're trading at 2.5 times book value, which is equal to the average, 44 times earnings, so it's a really inflated PE ratio. Their price of free cash flow looks real good at 10. That's stock price over free cash flow per share. And price sales is amazing at 0.6. They generate the most revenue, more than Omnicom. The stock price is 52, 8% below its 52-week high, 23% above its 52-week low. Look at Quinn Street. It's trading on its all-time high, 112% above its 52-week low. Travelzoo is 201% their 52-week low. They're also trading at their all-time high. If you put $10,000 into this company 10 years ago and reinvested the dividends, for the first 2 or so years, you would have been in the green, but then you would have been in a red, in the deep red, down about 70% at the worst point. There was a glimmer of hope in 2021. You were in the green again, but it's been red after that. It's a bloodbath. You'd be down 22% on your investment. To summarize, I have them trading at a 39% discount, ranking 5 out of 10. Would I buy it short term? Also 5 out of 10. It's pretty close to its 52-week high. I'm more likely to hold it long term, 6 out of 10. Ratios are okay. Price to free cash flow looks good. PE seems a bit high, so 6 out of 10. Financials 4 out of 10. Their free cash flow is down 47% since 2021, and revenue isn't up that much. Only up 16% in the same time frame. Let's take a look at their third quarter presentation slides. Revenue went down 2.6% when you compare 3Q23 to 3Q24. But if you just compare organic revenue, the same exact revenue from last year, it went up 0.5%. So their acquired revenue went down overall, but their organic revenue went up. Didn't really go up much, but it went up. Here's a breakdown of their revenue. 28% CPG, that stands for consumer packaged goods. That's up 7% when you compare it to last year. Their second biggest revenue generator is tech and digital services. That's 17% of their revenue, up 1.3%. Healthcare advertising is down 8%. That's 11% of their revenue. Automotive is 10%. Retail is 9%. Telecoms 7%. Financial services 6%. Other 5%, travel and leisure 4%, government 3%. So they have lots of clients across a broad range of sectors. Their revenue in North America is up 1.7%. Last quarter was up 2%, In the first quarter, it was down 5%. Latin America is up 1.5%. Last quarter was up 3%. Central and Eastern Europe is up 4%. Last quarter was up 3%. UK, that's where they're based, is flat this quarter, down 5% last quarter. Western Europe is up 2% this quarter. Africa and Middle East up 6%. APAC down 6%. These are their top 5 countries. The US is up the last 2 quarters, but revenue was down the 3 quarters before that. UK is up every quarter except the second quarter of 24. That was down 5%. They did well in the fourth quarter of 23, up 5%. Germany is up this quarter, but before that, they were down as high as 7% last quarter. China, they're always down a lot. 21% this quarter, 24% last quarter. India is always up. In the fourth quarter of 2023, it was up 22%. These are the next 5 biggest countries. Brazil's always down. This quarter down 5%. Australia is up this quarter 2%. Canada looks like it's usually down most quarters. Spain's up a lot. It was up 8.6% this quarter, 18% in the first quarter of 24. And France is usually up. This quarter they're up 2%. The exchange rate this year is 1 pound equals 1.3 US dollars. Last year it was 1 pound equals $1.27 US. The pound sterling has improved in all currencies when you compare 23 to 24. They have 4.7 billion pounds of debt. That's a heavy amount of debt, 4.7 billion pounds. 400 million pounds at 2.875% interest. That expires in 2046, so they have a lot of time. A euro bond is due next year, 444 million. Really low interest rate, 1.375%. The purple bars are pounds. The bright green are US dollars, and the blue is euros. So pounds are due next year, a little over 400 million. Then euros the next 2 years, then US dollars. Here are some of their customers. Amazon, that's a great customer to have. Starbucks, the medical company AstraZeneca, Unilever, L'Oreal. They work with Pizza Hut and Colgate, Palmolive. They're the self-proclaimed #1 largest creative agency. 26,000 employees, 150 offices in 64 countries. They also work with Coca-Cola. I didn't see that on a prior list. They're in the top 2 in PR firms. Their PR group has 6,500 people, 95 offices, 43 countries. And they work with Google, GlaxoSmithKline, and they claim to be the #1 media agency with 63 billion of billings. #1 in Europe, Middle East, and Africa, and #1 in APAC, #2 in North America. 40,000 people. They have 5 billion consumer profiles in 73 countries. They have a new CEO, Brian Lesser, and this segment also works with Amazon. Pretty good operating margins, 16 to 17%. They convert 85% of their revenue to adjusted operating cash flow. Net debt over EBITDA is between 1.5 and 1.75. Oh, these numbers are the forecast for the medium term. Let's look at a company on Simply Wall Street. Its last price, 52, 11 billion market cap. Down a little in the past week, up 9% in the past year. It IPO'd in 1990. Only 2 years after IPO, it hit an all-time low of $2.50. It grew 50x from 250 up to 100. It took 8 years to do that. It just traded up and down over the next 13 years. And then by 2013, it was back to 100 again. Over the next 4 years, it traded at a pretty high level. It broke through 120 at one point, but it never got that high again. It fell to 30 in March 2020, and then it more than doubled from that point to about 80 in the beginning of 2022. But it's down about 40% since that point, trading in the low 50s. Simply Wall Street's valuation is 73. They say the stock is 29% undervalued. No analyst priced this stock. Maybe because it's a British company, I'm surprised there's no analyst looking at it. Their revenue hasn't moved too much since 2013. It was 11 billion. It got up to 16 billion in 2017, but now it's under 15 billion. These numbers are in British pounds. So 15 billion pounds is roughly 19 billion US dollars. They always have positive free cash flow. It got up to over 2 billion pounds in 2021. Now it's 900 million. They pay a semi-annual dividend, it looks like in June and October. Every year in June and October, except 2020. Only October and 2020, no June. And this blue line is the yield. The yield got up to 6.5% in 2019. It fell to 2.5%. Now it's back up to over 5%. The forecast is 4.8% by 2026. The CEO's salary is £325,000. That was in 2018. Now it's 1.1 million. Total compensation 4.5 million. Tenure as CEO 6 years. 59% of the company is owned by institutions and 41% by the general public. BlackRock is the biggest shareholder, almost 7%. Fidelity at 2%. Geode at 1%. And the bottom of the list is Brands Investment, 0.5%. Their employee count is down. It was 119,000 in 2013, 134,000 in 2018. Now it's 111,000. And the ticker trades on the New York Stock Exchange, Deutsche Börse, London Stock Exchange, the BATS Europe, Mexican Bolsa, and Sao Paulo Bolsa. So if you want a copy of my discounted cash flow model, click on the video in the top right corner.